Yo, what's going on YouTube? It is your boy Alec here. So today we are looking at ICT's unicorn model. I know some of you are wondering, what is that? I've never heard of an ICT unicorn model. I've scrolled through this channel. I've never seen anything called unicorn. What is he talking about? This must be a lie, my friend. According to the author of the model ICT, this, my friend, is a high probability model. If you're from the side of the world where I come from, ababando batinoti isusu isapheyese pomba. I'm joking. But this is the ICT's unicorn model. Um, I didn't intend on teaching this right now or mentioning this right now, but there has been a request because I made a mention in my previous video about this model. So some guy, let me show you in my Telegram chat, has requested me to create this model. All right. So the guy's name is Moeketsi. I don't know if I got that right, but shout out to Moeketsi. So he said here, thanks for the regular market updates. The audio is a bit inaudible from the start. Kindly reveal and fix it. And then he said, you mentioned a unicorn model in one of your clips. Can you please elaborate? Share it if possible. So that's what I'm doing right here. So shout out to Moeketsi. This video is for you and for everybody else. All right. So let's get into the gist of the story. No. What did I do? Okay. So let's get into it. I see this unicorn model. What is it? We cannot talk about ICT's unicorn model without mentioning the very fact that this model was mentioned inside ICT's 2022 model mentorship. So ICT talked about this, but he did so in passing. That's the reason why, if you scroll his channel, you might not find something written ICT's unicorn model. It's because he's mentioned it in passing on his 41 episodes, ICT model 2022. So, what is it all about? Let's get into it. So, you already know what ICT's 2022 model is all about. I've shared that in the previous 3 videos. So, go and watch those if you don't know what the 2022 model is all about. But today, we want to look at the unicorn model. So, for you to understand the unicorn model, you firstly need to understand I see this bullish and bearish breakers. Without knowing what these are or how to use them, then you won't know how to use the unicorn model. You don't even know what it is all about. So we'll look into bullish and bearish fair value gaps first, then we get into the unicorn model. So guys, the playbook rules never change. Number one, if you're trading breaker blocks or breakers, the rules are the same, guys, for me on model 2022. So this is an extension or a part of 2022, whatever you would want to call that. Number one, I want to see a clear premium or discount. In other words, before I take a buy or sell, the market has to be in a clear premium or a clear discount market. Second thing I want to see is I want to see a rate on stops, buy stops or sell stops. Third thing, I want to see a displacement with a mass shift closing above or below the previous swing high or swing low. Number four, we buy or sell any retracement into the breaker. Remember on model 2022, we were talking about buying or selling into the return to the fair value gap. When we're trading breakers, we are trading buying and selling the retracement back into a breaker. So you want to know what a breaker block is, right? I would mention that. So stay tuned. And if you're not yet subscribed to the channel, make sure that you hit that subscribe button and subscribe so that you don't miss any notification, any video whenever I post. Number five, we target the next draw, the next closest draw on liquidity. And the best executions for day trading are always inside ICT skill zones. Breakers with the highest probability sweep two pools of liquidity first before an MS shift. Short-term high, short-term low, then high time frame liquidity sweep. So let's get into it. What is a bullish breaker? We'll look at bullish breakers first. That is the last up close candle or a series of up close candles prior a raid on sell stops and an MS shift, a market structure shift. What am I talking about? So I said, can you see my cursor? All right. So I said a breaker, this is the breaker here, is the last up close candle. If it's a bullish breaker, is the last up close candle before the raid on these tops here. Hey, come back here. The last up close candle here before this raid on sell side liquidity here and MS shift. So we see an raid on stops, an MS shift. This is model 2022, remember? Sell stops rated, MS shift, the last up close candles here. The last bullish candles, all right, or a series of them. When price returns to those candles, they are the breaker block. In other words, breakers are simply, let me call them failed order blocks. If you are trading, order blocks, say there's an order block here, we've seen price break below this low, you're expecting that when price comes back into this order block, it will sell off, right? But then price comes into the order block and then breaks the order block. Once it breaks the order block, it becomes a breaker block. Not an order block, it's now a breaker block. A breaker block. More like what you do with inversion fair value gaps. You're now inverting that order block to become a breaker. So when price returns to that order block here, which is the breaker block, it should buy off from there. Are you hearing me? All right. Let's look into it in real time chart. So we have a pool of liquidity rated here and here, rated here. Then we have a displacement higher. The last up close candles here, up close candle here, this green candle here. Extend that out in time. That is your breaker block. When price returns into it, you're buying from there. Attacking what? The next closest draw on liquidity. Look at it again. With sell side liquidity here in a discount market, sell side is purged. Then we have displacement higher, shifting market structure. We have an imbalance that got rebalanced. Price move away. If we are to continue with this bearishness, price must not trade above this intermediate term highs formed here. The moment it does, we have a shift in market structure. So if sell side purged, displacement higher, shift in market structure, last up close candle here, this green candle here, extend that out in time, that's your breaker block. When price returns into it, we're expecting buying to happen from there, and it buys off, comes back into it, wicks into it, buys, attacking what? The next closest draw on liquidity. Again, guys, with sell side resting below here, sell side liquidity here, what happens? It's purged, displacement higher. This is 1 hour time frame. So price is it doesn't matter what time frame you're on. These things still apply, all right? Sell side is purged here, displacement higher, the last up close candle before this radon stops and before this MS shift. That candle extended out in time. The algorithm is going to remember this candle, this price level. Price returns into it and it buys. Comes back into it, and buys. Attacking what? Liquidity resting above here, buy side. But look, this wick stops here. The bodies of the candle tell the story, the wicks do the damage. Look at the bodies. The bodies of the candles are closing exactly at the low of this breaker block here. It's not random, guys. This is algorithmic and it buys. Let's look into it again. With sell side resting below here after hitting a high time frame PTRA and order block, price raise sell side here, displacement higher, shifting market structure. these last 1, 2, 3, 4, these green candles here, these last 4 green candles here form our order block. It's a series of up close candles. Now extend these out in time. When they're broken through like that, that becomes a breaker block. This order block here becomes a breaker block. Price trace back into it and it buys off. So let's look now at bearish order blocks or bearish breakers. Rather. Bearish breakers. That is the opposite of everything I've been saying right now. That is the last down close candle. We were looking at the up close. Now we're looking at the last down close candles or a series of down close candles prior a raid on buy stops and a mass shift, market structure shift. Okay. So if buy side resting below here, above here, price raise that, taps into a high time frame PDRA or pool of liquidity, then displaces lower. After displacing lower, what is this? The last down close candles here are in order block. So when price traces back into this order block here, it should continue buying if we are to continue with the bullishness. A price trace below it, that makes this order block a failed order block. That means it's going to invert now to become a breaker block. All right. So price comes back into the breaker block and begins to sell off. Real charts, guys. With buy side liquidity resting here, buy side is pushed the second time again. Then we have our displacement lower. Shifting market structure. This last black candle here, the last down close candle here, the last bearish candle here, extend that out in time. Price returns into it first time, second time, sells off. That is our breaker block, guys. Another example. Buy side here is purged. Displacement lower, shifting market structure. The last up close candle here, or 1, 2 candles. The last up close, added two of them. You can draw them as two, but the most sensitive part of it is going to be the last one. Extend that out in time. Price returns back into the breaker block, sells off aggressively. Where are we, guys? We're in a premium market. All right, now that you understand what breaker blocks are all about, let's look now into ICT's unicorn model. Let's get into the gist of the story. My friend, this is a high probability model. You can bet your life on this, all right? Once you see it, guys, you cannot unsee it. So, what is the unicorn model? The unicorn model appears or occurs when the breaker block overlaps with the fair value gap. So remember, on Model 2022, previous 3 videos I've released, go and watch those guys. When I was talking about the model that brought consistency into my results. All right, watch those guys. One shot, one kill, some dope shit. All right. So if buy side liquidity resting above here, just remember we are still doing Model 2022. Buy side here is purged, displacement lower, shifting market structure. Inside the displacement leg, we have a favorable gap. Yes, this one here. So this is a model 2022, right? So you anticipate that when price retains into the favorable gap, it sells off. But while we have this favorable gap here, we also have a breaker block here, a bearish breaker here. So where the breaker is, we also have a favorable gap at the same area. That means we now have two confluences on the same area, confirming that we're going to sell. So we have a fair value gap and we have a breaker. Two confluences, guys. This is out of this world. When price returns into the breaker and the fair value gap that are overlapping, that is the unicorn. Price sells off. That's for the bearish one. For the bullish one, we have sell side here. Sell side is purged. High time frame PDRA, displacement higher, shifting market structure, model 2022, leaves a fair value gap in the displacement leg, extend that fair value gap out in time, and we have a breaker here, a bullish breaker. This is a bearish breaker, this is a bullish breaker. So bullish breaker, or into the bullish breaker, and the fair value gap sells off. buys or can you see them? Oh, can you see the model here, guys? The unicorn model. Can you see it? Pause the video, guys. Can you see it? All right, let's get into it. So, Euro USD, you can check 17 July 2024, 5-minute chart. You can go on your charts. You'll see these guys. From with an M15 order block here, which on the 5-minute time frame was appearing as four black candles, four bearish candles. That forms one order block. All right. So with that order block here, that will be our high time frame PDRA. With 1, 2, 3 lows relatively equal. Sell side is rating below here. So price purges below. That sell side liquidity is taken. Displaces higher. The last green candle here, this one. The whole breaker will be 1, 2, 3, 4. So you can draw the four of them, extend them out in time. I drew this one because this is going to be the most sensitive part of it. All right. So that the one in gray is our breaker block. This is our midnight candle, midnight open. So we said that we buy at or below the midnight opening price. So if model 2022 here, lows are rated, displacement higher, shift in market structure, leaves a fair value gap here, another one here, and then we have a breaker here. So we have this breaker, but where we have the breaker in gray, we also have a fair value gap here. The one I marked in yellow. So the breaker and the fair value gap are overlapping. That makes this a unicorn. If price should trade back into this breaker, and this fair value gap, you should buy. And price does trades into the high of the breaker and the fair value gap, taps into it at the midnight opening price, exactly there, slightly below, and buys aggressively. Hi, what time is it doing this? 2 a.m. to 5 a.m. New York local time. What is that, guys? 2 a.m. to 5 a.m. What is it, guys? London open Q zone. We said that we want our entries to be done where? Inside our Q zone. Another example here, guys. This is on 1 hour time frame. Our USD with sell side resting below here, sell side is perched with displacement higher, shifting market structure. Our breaker is over here, extend that out in time. We also have a fair value gap here, overlapping with the breaker. So price trades back into the breaker and the fair value gap, buys off. This, my friend, is the unicorn model, where the fair value gap and the breaker are merging, are overlapping. It's high probability you have two confluences on one place telling you this shit is about to go up. Another example, guys, old USD M15 with buy side here, buy side is rated with displacement lower, shifting market structure with an imbalance that got rebalanced, priced, moved away. If we are to continue with this bullishness, price must not trade above, below this intermediate term low. The moment it does, with a shift in market structure. So buy side is rated, displacement lower, shift in market structure. Model 2022. Do we have a fair value gap here? Yes, we have it right here. Extend that out in time. But while we have the fair value gap, the last up close candle here before the radon stops and the MS shift is our breaker block. Extend that out in time. Price returns into the fair value gap and the breaker block sells off. It is what it is, guys. You have to practice these things in your own charts, all right? M15 Euro USD, we're in a discount relative to this, the low that was here and high discount market. Asian low is purged, sell side has been raided. The displacement higher, shifting market structure here and here. The last up close candle here, or the series of it, is our order block. Price trades above that order block, it becomes a breaker block. All right. Then with this breaker here in gray, just above it, we have a fair value gap here. We have another one here. All right. Price trace back into the fair value gap in yellow and taps in the upper part of the breaker in gray here, buys off. Guys, thank you for watching. If you're not yet subscribed to the channel, make sure you do right now so that you're notified every time I create a post, I post a video, something like this. All right. Until I talk to you guys next time, God willing, God bless. Don't forget to like, comment, share, and subscribe.
Whole bitch, just wanna do, just wanna love. Solo na musa, hindi na una mas love. Yeah, just wanna do, just wanna love.